Hi, we're continuing on some topics that help us make trading decisions. If you like this kind of video, please make sure to subscribe, like, comment, and share. We really appreciate your feedback. Now let's get started on the topic today. We're going to be exploring grayscale products and ETFs further. So we'll be going over some ETF, the Grayscale Trust NAV premiums and discounts, and its recent price action and with these spreads, and we'll gloss over some ETF products. So let's get started. First, we want to go over some developments in kind of Bitcoin or cryptocurrency products. Here I've listed Bitcoin products for simplicity, just to compare the various things that are out there in the world. So recently in Canada, there are some listed ETFs or exchange traded funds. With exchange traded funds, one is able to subscribe and redeem to funds, which gives traders an arbitrage mechanism to keep the prices in line close to the NAV. And they include the Galaxy Bitcoin ETF and the Purpose Bitcoin ETF. And I think there's maybe a couple others that are out there or maybe on its way. In the US, there is no ETF. So currently we have what's called listed trusts. So I think we've discussed a bit before on the Grayscale Bitcoin Trust. There's also the Osprey Bitcoin Trust, which is management fees are about a quarter or maybe even less of Grayscale Bitcoin Trust. Currently, the Osprey Bitcoin Trust is trading around 20 or maybe even over 20% premium to its net asset values, just because there hasn't been a lot of shares that have vested and become available for sale. But I think as more shares do come out for sale, we expect this premium to the net asset value to decrease and really exhibit something that is similar to Grayscale. In Switzerland and Europe, there is listed exchange traded products, which are similar to ETFs, where one can subscribe and redeem. Now, individuals or individual companies or funds may not be able to do it as far as subscribing and redeeming, but there is authorized participants who are able to do so. So you can look at the prospectus and see who are able to do so. But again, there is an arbitrage mechanism. And one of the bigger ones, I think I'll just mention here in Europe, is the CoinShares physical Bitcoin ETP. I'm sure there's quite a few more, but just here, this is just an example of one of them. So we will continue on and look at the recent prices in the GBT NAV premium and discount. So we're going to look here for the past month of the premium and discount to the NAV of GBTC. So we're going to review some things. So we can tell as of mid February, the premium was around 10%. And as we know, back in January, it was even higher, as upwards at 30%. So throughout January, the premium has been falling. And in February, it has continued to fall until basically the end of March and the end of February and the beginning of March. The premium had completely disappeared, and what we found now going into the month of March is that this Bitcoin Trust, the GBTC, is now trading at a discount to NAV. It seems like it has gone as low as 85, so a 15% discount, 85% of the NAV, but has since bounced back up. Now it's trading rather consistently for the past going on its third week, hovering around this 94 to 95% of the NAV, so about a 5 to 6% discount. This is a pretty good sign of a recent decent bit of stability. So we do hope it can continue. Some of the things that maybe as a trader you can do is just to move some of your physicals and trade around this range a little bit, maybe buy little bits here where it gets a little bit lower in the low 90s, the 8% discount, 7% discount, for example, 7.5%, and then flip it back out for a profit. And this is something that one may be able to do for some quick trading. Something that we don't particularly want to take on any large positions, but you could probably make a little bit here and there. But we will go over some other risks that are present if you are to do these trades, things that you need to be aware about. One of the things that is quite important to likely look at the continuing discount or increasing discount or the chance of premium for GBTC is to look at how many shares are coming for sale, or it's basically has been vested. A lot of guys, a lot of hedge fund types have subscribed for these shares thinking that they can monetize or seize the opportunity to get a 30% premium, which was quite prevalent at the end of 2020, beginning of 2021. I think a lot of greed got into this trade, and now what you find is a lot of guys who subscribe for shares who finally, as of probably going into April, which is basically October subscriptions, going all the way until June or July, which is basically towards Christmas 2020 when there was large premiums. You're seeing a lot of these shares come out, coming out of vesting, so they can be eligible for sale. And I think a lot of these are held by I'll call institutional grade investors who may need to liquidate some of their positions. So when you look at this schedule, this is the amount of $1 million, roughly around $1 million that has come invested, and probably a good amount of this has been taken and monetized for some profits previous to March. So you can tell that there was a little bit that came out. These were guys who came out in the summer, around here, the summer of 2020. And when these shares have come to be released, some of these shares were actually sold for profit. So these trades here, the release, were extremely profitable. Now, come in January, we have seen the first kind of real big area here of shares coming out for sale. And probably the first time that you found a larger crowd of hedgers or hedge fund spread trader types come in to make this trade. And what we're seeing is that basically the premium has also come down with these guys trying to take profits, and at the end probably breaking even, and in March even cutting some of their losses. What we do see is a continuation of very large amounts of shares and its value that are coming out in the next, for this quarter between April and the end of June. This is a lot of shares that are coming out. There could be a couple bad actors that have to cut their losses. They may not be able to meet certain margin calls. So this is something that I would be highly concerned about in terms of trading, going long from a discount side. So buying it at discount. This is one of the biggest concerns that I would actually have going forward. So something to consider. In the meantime, you can kind of job the shares, which may turn out to be somewhat profitable. So, but one large risk that one has to consider is that the sheer number of shares that are coming out. Okay, we'll look at ETH and its premium and discount to NAV. So like GBTC, ETHE, which is the Grayscale Ethereum Trust, we've seen some premiums here at the end of February, even higher than 10%. I think there was a couple of days where Ethereum got quite spiky, that these premiums have actually also gone up quite high. But what we can tell, again, is similar to this GBTC, these premiums have quickly come off, and it's trading towards the end of February, right around the NAV. And what we've seen further is that it's traded now to a discount to the net asset value of the shares. It hasn't again, on the 8th, the same time, it traded to a very similar discount to GBTC, probably around 15% discount. This is 85% of the NAV. These are the ratios. However, since then, kind of like GBTC, this has kind of settled again, right kind of looking around the 95% of NAV or 5% discount. So pretty consistent here. Again, maybe one can run a similar trade if they're going to arb or switch out of physical and into these trusts. Maybe you can make some money buying on the lows here, selling on the highs. But again, there is some risks and issues you have to consider in the long term. So this is here is how many shares of ETHE or how much value is coming out for sale. So what we can tell is that this early 2021 number of shares right here is really the ink that release that caused this the premium to basically collapse, the premium to NAV to collapse. So what we can now see is that there is still quite a bit of shares. In fact, about 2/3 of shares are still not yet vested. So there is a lot of shares coming out for sale, held by professionals. So it really depends on whether these professional types of spread traders do have what we call diamond hands to carry on. So quite a bit of risk here. I think we can see a good chance that we will see these discounts continue to maybe drift lower. Is our guess, is what's going to happen. Now you could trade back and forth around it, but you would always have to keep in mind that there's always that risk that this discount may continue to drift lower as more and more shares are coming out. Now one kind of interesting thing is that I know a lot of Americans are buying these things with their retirement accounts, and to note, these advents of these other ETPs or ETFs in Canada or in Switzerland elsewhere are really not eligible for IRAs. So as if there's Americans, they are kind of cornered right now into buying these trust products if they want to have this Bitcoin or crypto exposure in their IRAs. So this is from the Journal Accountancy. It basically says that unless you're buying American depository receipts or ADRs, IRA owners should restrict investments to the continental United States. So, in a sense, as there are bigger IRA accounts, Americans are right now cornered into buying these imperfect products due to US regulations. So if you're buying these GBTCs or ETHEs, you could take a little bit of comfort that at the current point in time, American IRA accounts, and I also would assume that 401ks are restricted from finding much better ways of investing than these trusts such as Osprey and Grayscale. Looking at the ETF, we're looking at BTCC here. This is the NAV spread. So looking at the premium to discount to the NAV. This is the Canadian ETF that has been around the longest, which isn't a long time, but nonetheless, what we do see here is that even though there are some spikes here and there in prices, we do see that prices really do revert back to the NAV. So this is where there's both, quick subscriptions, quick redemptions, and arbitrage mechanism works. And so this is what, a real ETF should kind of look like. When you look at something as well traded as like the, spiders, for example, you would even see these kind of large spreads in prices. You would almost see a straight horizontal line. So you can see here relatively that ETFs does its job and able to keep its prices very close to the net asset value. Some things to keep up is in the US, it looks like there is a chance that ETFs are coming. A lot of companies have, or entities have actually sought or are planning to get approval from the SEC for ETFs, including Anthony Scaramucci's Skybridge. It looks like Wisdom Tree, I think NYDIG, I don't know who they are, Valkyrie and Van Eck, are all very large, highly capitalized fund managers are all going to try to apply for ETFs. So it's quite possible one or more than one of them can get approved. Grayscale seems to also be looking for an ETF. It's possible that Grayscale may actually simply close or convert its current product into an ETF. However, due to its, from an economic perspective, I think Grayscale, for its own benefit, should keep these trusts going as is. The amount of fees they can have is tremendous and intergenerational. So, I mean, if I were them, I would create a separate ETF, but let this go. So we will see. Maybe they feel that they have a service to their investors to allow them to redeem and convert, but we will see. So we'll see what happens when an ETF occurs and how it happens. So yeah, this is the current situation of the discount premium to the net asset value in grayscale and the ETFs. Okay, please check in with us next time. We'll go over another topic. Yeah, thanks for listening and watching.